Hello, accounting students. So today we'll be focusing on fixed assets, also known as tangible assets. So we need to calculate the missing figures indicated Roman figure 1 to Roman figure 3. So as you can see, Roman figure 1, you are required to calculate your additions at cost at the beginning for Lendl buildings. Right. Okay. As you can see here, we have our cost at the end given as 6,150,000, as well as we have our additions at cost. So it means now to calculate our cost at the beginning, we will take our cost at the end. That's 6,150,000 minus 500,000. Then we will have cost at the beginning amounted to 5,650,000. So now our Roman figure 1, it's 5,650,000. Moving right along, Roman figure 2. So our Roman figure 2, we need to calculate our disposal at carrying value. Remember the formula for carrying value, it is cost minus accumulated depreciation, right? Then to get our carrying value. So we have additional information here, bullet number 3, right? So we have an old vehicle cost price amounted to 300,000 was sold at carrying value, right? Was sold at carrying value on 31st August 2022. However, the accumulated depreciation on this vehicle amounted to 240,000 on 1st March 2022. So when we check our financial period, we were told that the accounting period ends on the 28th of February 2023. This is the end of your accounting period. So meaning that 1st March 2022 will be your beginning of your accounting period. Right. Now that we have our cost of 300,000, we also have the accumulated depreciation of 240,000 and our formula for carrying value. Remember, it's cost minus accumulated depreciation to get our carrying value. So now remember, disposal, you need to first calculate your depreciation on your asset disposal as required. Depreciation on vehicle amounted to 15% on cost price method. So as you know, the formula for cost price method, it's ART, which is its amount multiplied by rate, and then you multiply by time, right? So now we need to calculate our depreciation. Step number 1, we need to calculate our depreciation for asset disposal. Then right, the cost, it was 300,000, right? According to the formula given here, we have an amount of 300,000 multiplied by rate. Remember, our rate for depreciation on vehicles, it's 15%. So you multiply by 15 over 100, then you multiply by time. So now your time, since this asset was sold on the 31st August 2022, it means you will start calculating from March, the 1st of March up until 31st August 2022. So it means this asset will be depreciated for 6 months. So it means the value of depreciation will be, so it's 22,500. Okay, let me fix this one. Yeah, so it's 22,500. So now we have the value of depreciation sold amounted to 22,500. Now we use this formula. So our cost, remember, it's 300,000 right, minus accumulated depreciation of 240,000. Remember to add your depreciation for asset disposal amounted to 22,500. So basically this formula, it's your cost here of 300,000 minus your accumulated depreciation inclusive of your what, your depreciation sold. Then our carrying value for vehicles will be it's 37,500. So now our Roman figure 2, it's this 37,500 as our disposal at carrying value. Right, so let us go to Roman figure 3. So Roman figure 3, you are calculating depreciation on equipment. Remember, depreciation first, you have your what, your SAN, which is now, SAN stands for what? It's sold, right? And then you have old, and then you have your what, your new. So now when you check your information, so you have what, new equipment was purchased on 1st November 2022. So it means we have one new asset. We need to also calculate depreciation on old. So first it's new, then the last one is old. So let us start calculating the depreciation for new asset first. So again, the formula to calculate depreciation on this new asset, still it's ART, which is ART stands for amount, rate, and time. So the amount of this new asset, it's given under tangible asset, which is additions at cost. You have 270,000 as your amount, then you multiply by rate of 10%, then you multiply by your time. So this asset was bought on 1st November 2022. So you will start calculating from November up until the year ends on Feb 2023. So from November to February, this asset will be depreciated for 4 months. Therefore, our value of depreciation on this asset will be 9,000. So now we have the value of depreciation on this asset amounted to 9,000. Right, now what is left? We need to now get our depreciation for old asset. So now old asset, it's pretty much simple. Remember, you are using your carrying value. So now carrying value is, it's cost. Here is our cost, right, minus accumulated depreciation. So now it's 970,000. You subtract your 610,000. Therefore, we will use this carrying value of 360,000 since we are using our carrying value method, or also known as diminishing balance method. So now 360,000, right, you multiply by 10%. Remember, our old assets, it's always 12 over 12. Then it means this asset or our old asset will be depreciated by 36,000. So remember, your requirement or the question was for you to calculate the total depreciation of equipment, which is now it's new plus what, plus old. So now your total depreciation will be 9,000 of your new asset. You add that 36,000 for old. That means the total depreciation for equipment will amount to 45,000, right, or 45k, since you all are 2ks. So it's 45,000, right? I hope the session was productive. We'll be glad to see you on the next one.